Let's look at two people living almost identical lives, but making one different decision. Rahul is 28, he's earning well, he has no major liabilities yet, and he decides to buy a term insurance plan early. Amit is 35, he's now married, maybe has a child, has a home loan, and finally decides to buy term insurance. Both of them end up buying a 1 crore cover from similar insurers with similar features. Now on paper, it looks like they've made the same decision, but financially and practically, the outcomes are very different, and we will discuss that today. Hello folks, I'm Shashank, you're watching Ditto Insurance. At Ditto, we help you compare term and health insurance plans with honest advice from IRDAI certified advisors. There'll be no spam, there'll be no forceful selling and no upselling. If you want help deciding how much cover you need or which plan works best for you, you can book a free call through the link in our description. Now, coming back to Rahul and Amit. The first thing that changes is the premium. Now on your screen, you will see a premium comparison across profiles and sum insured levels. Now, don't get stuck on the exact numbers, just observe the pattern. Alright, when Rahul buys at 28, his premium is significantly lower for the same 1 crore cover. When Amit buys at 35, the premium jumps noticeably, and this isn't a 1 year difference. The higher premium continues for the entire policy duration. Over 30 to 35 years, Amit ends up paying a substantially higher total premium for the exact same coverage of 1 crore. Now, what looks like a small delay quietly turns into a large financial difference over time. Now, let me give you another perspective here, okay? At age 25, a 2 crore cover costs around 18,900 a year. But by 35, even a 1 crore cover costs around 17,700. That means in just 10 years, you're paying almost the same amount for half the coverage. If you compare costs for a 1 crore cover premium jumping from 10k at 25 to 17k at 35, that's about 65% increase. So delaying by a decade doesn't just raise your cost, it reduces your protection to premium ratio by nearly half. In simple terms, the longer you wait, the more you pay for less, proving that age directly compounds your insurance cost. See, premiums are not just about the age, they're about risks too. When Rahul buys at 28, he's statistically healthier with fewer chances of underlying conditions. Insurers see him as low risk, so they offer better pricing and smoother approval. But by 35, even if Amit feels perfectly healthy, a lot can change in reality. Slight weight gain, borderline cholesterol, early stage hypertension, or lifestyle changes like smoking or irregular routines can all affect underwriting. These may not feel serious from a personal standpoint, but for insurers, they directly impact pricing, eligibility, and terms. In some cases, people end up paying higher premiums, facing exclusions, or even struggling to get the desired coverage. Okay, now heading to the next bit, let's understand what actually affects your premiums and eligibility. See, as we discussed, age is the most obvious factor. The older you are, the premiums increase with age. Health is a second major factor. Any pre-existing condition like diabetes, BP, even something minor can impact underwriting decision. See, lifestyle plays a big role here as well. Smokers usually end up paying more. Alcohol consumption has to be declared. BMI and overall habits are also closely evaluated. Finally, occupation and hobbies matter too. If your job and activities involve higher risk, insurers factor that into the pricing. But when you buy early, you lock in all of these factors at their most favorable stage. Rahul locks his premium at 28, and even if his health changes later, his premium remains the same. Amit locks his premium at 35, and that higher cost continues for life. Now that we've seen both the sides, let's bring this together. Buying term insurance in your 20s isn't just urgency or fear, it's about efficiency. You lock in lower premiums, better health terms, and long-term protection at most favorable point in your life. Buying in your 30s is still perfectly fine and necessary, but it comes at a higher cost and with tighter underwriting. And if you delay further, the gap only keeps widening. Folks, if you're unsure whether you should buy now or how much cover you need, as I mentioned, you can book a free call through the link in the description. We'll help you figure out without any spam based on your profile. No generic advice. So Rahul and Amit both made the right decision eventually. They both bought term insurance, but Rahul made it earlier, and that one decision gave him lower premiums, better terms, and uninterrupted protection. Amit made it later, and that delay cost him money, flexibility, and years of coverage. And that's the real takeaway here. In term insurance, time is not neutral. The longer you wait, the more expensive the same decision becomes. Alright folks, I'll see you in the next one. Until then, happy insurance hunting.